Welcome to the Note Nuggets podcast, where you can learn how to become the bank, build wealth, and accumulate streams of income perfect for your savings or IRAs. You'll hear from industry experts, seasoned veterans, and everyday investors. Our goal is to teach you how to invest in notes, one nugget of knowledge at a time. Here's your host, Kevin Galang.
Welcome, everybody, to another episode of the Note Nuggets podcast, where you learn how to turn other people's debt into income for your savings or IRA. Being a hard money lender is a great way of becoming a note investor. Hard money lenders are typically used to fund house flippers. You know, those people on HGTV that turn an ugly house into a pretty house and have some cool story behind it. One of the ways that they get funded is through hard money lenders. And as a hard money lender, you get a lot of the same advantages other note investors do. You're secured by a property, but the value of the property is kind of in limbo as it is actively being renovated. So until that house sells, it's hard to gauge what the true value of the property is. While you're collateralizing your money with the property, you still don't have to worry about the maintenance or repairs. Well, that is unless you have to foreclose on your house flipper because they didn't pay you, then you'd have to finish the repairs and renovation yourself, or you could find another flipper. Because you're originating a new note, you get to set the terms with the borrower. And because a hard money loan is not a residential loan, to my knowledge, it's not subject to the same rules and regulations as a residential loan is. But for more confirmation on that specifically in your area, wherever you are note investing, I highly recommend double checking this with a local real estate attorney. Since I am currently not a hard money lender yet, I brought on an experienced hard money lender to share what the typical terms of a hard money loan are. But first, let's learn about our guest. Charlie Einsmann has 25 years of real estate work experience and is especially skilled at working with distressed properties and financially distressed property owners. Mr. Einsmann jointly owns Clear Sky Financial, a hard money lending company that currently has over $25 million in outstanding loans and has done over $100 million in loan volume. Now, for our listeners out there that may not be familiar with hard money loans, what are the typical terms of a hard money loan?
Okay, so let's talk about the terms. It just depends on our risk level. I have one program that's basically 100% purchase, 100% renovation, and then it's 70% loan to value. And so if they fit that category and they have a lot of room in the deal, then we'll go out at 10% and 4 points, 10 and 4. We call that the 10-4 Good Buddy program. And so what happens is that they won't even have to make any payments, but it's a 6-month loan product. But our standard terms usually, though, are 12% interest only with 3 points and a no prepayment penalty. So now if you're a borrower and you're really good at executing, if we give you a 9-month loan and you pay us back in 4 months, then you're only paying on that loan for 4 months. So most of the high volume fix and flippers or the rehabbers love to deal with us because we don't have a prepayment penalty on that second loan product type. The first product type, the 10-4, we do have a 6-month prepayment. So if you're out there for 3 or 4 months, then you're going to owe us just 10% of the principal balance, and that's it. And there's no payments that have been made. And most people like that because it alleviates their cash component, right? So they're paying a couple points up front. So they might pay a little bit of closing costs, but if the deal is so good, then I'll actually build those closing costs into the deal itself so that they won't have to come up with any money out of their pocket until actually their fix and flip sells.
There you have it. Those are the typical terms of a hard money loan. Potentially double-digit yield and shorter timelines, but increased risk. To learn more about hard money loans, head over to notenuggets.com/hard-money. Thanks, everyone.
Thank you for tuning in to this week's episode of the Note Nuggets podcast. Be sure to subscribe to the show to get access to additional weekly value nuggets and get notified with episode updates. To subscribe, all you have to do is head over to subscribe.notenuggets.com. If you have any questions about this episode or note investing, book a time on Kevin's calendar at contact.notenuggets.com. We'll see you next week with another note nugget to add to your tool belt.